Thank you, Mr. Chairman. We talk about the $24 billion of debt that NFIP has, and it begs the question, if we're going to transition to a private market, is there sufficient capacity in the capital markets to do this? And I'll ask you just one down the line, Mr. Ellis.
Well, as I indicated before, there is an appetite for risk, particularly in the reinsurance markets, and there's an interest of insurance. And you saw that, for instance, in your state, Mr. Ross, right after Bigger Waters, there was an interest of trying to write flood insurance. There's been a growth in that marketplace, and so clearly there's an appetite for risk. How great that appetite is, it's not entirely clear, but there is definitely a significant appetite for that risk.
Would you agree, Mr. Gray? I mean, as a broker, do you feel that there's sufficient capacity to meet the need that the NFIP?
There is capacity out there, and lots of it. Now, how long that stays and what the pricing looks like, who can say? But right now, absolutely.
There definitely is. Would you concur, Mr. Brown?
Yes.
Mr. Gray, you spoke on something just a second ago with regard to mitigation, and I think that's something that needs to really be addressed here. There's studies that have been done that for every $1 of prevention into mitigation, you save 3 or 4 from relief after the post-event relief. And I think that the NFIP has not been necessarily stellar in advocating mitigation. I mean, let's face it, you get discounts in homeowners for storm shutters, you get discounts for ABS in your automobile. There's discounts that the consumer gets as a result of mitigating any risk. But that's more a function of not the private sector. Would you not agree? And I guess, Mr. Gray, what I want to ask you is, could you expound on how the private sector entering the market can impact the extent of greater mitigation in flood?
Sure. Well, remember, insurance is only one piece of this puzzle that we've been looking at, and you've mentioned some of those other pieces. Private market coming into and appropriately pricing the risk would hopefully encourage homeowners and others that are involved in this process to take a look at what they can do to actually save on their premium dollars. And certainly, if the program is functioning properly, where there's more than just reinsuring the same risk over and over again and suffering repetitive losses over and over again, then I think you'll see some improvement in the properties, or people will abandon what becomes economically unfeasible properties.
And economically or actuarially speaking, would you say that there's more than one way to value risk?
Well, sure.
And unfortunately now you've got only one valuation of risk that's being done, and that's by NFIP.
Yeah, it's whatever the government says that valuation is.
Right. And supposedly they're supposed to start sharing some of that with us, but we'll see where that goes. Mr. Brown, you are very familiar with the state regulatory schemes. I think McCarran-Ferguson has been good for the insurance market. It's been very good for the consumers. And one of the things that state regulatory environments provide are strong consumer protections. Would you have any comments as to what would be in the benefit of the consumer in terms of protections if we were able to pass a bill such as this that allowed for the licensing of private carriers into the market?
Well, in particular with regard to claims paying, I think what happened in New Jersey is a lesson that we can learn. States have an extensive consumer protection in place, and they also have unfair claims practices in place which protect consumers for all coverages offered in that state except NFIP coverage.
So if a consumer has a problem with an NFIP policy, they can't go to their state regulator. They got to go to NFIP and hope that they can get it resolved.
That's correct. And I would tell you from my experience, both as an agent, as a legislator, and as a lobbyist, that in Florida in particular, regulators are very interested in doing what's right for consumers. If I had a flood policy and a flood claim, I would much rather rely upon my state regulator than having to go to the NFIP.
I appreciate that. Mr. Ellis, you spoke just briefly about the consumer protections. You also spoke about the grandfathering in. And I think the situation we're in is that if we were just starting fresh today, we would redesign how a private market should be able to cater to and influence behavior in terms of building and not building in high-risk areas. But since we're dealing with reality and we're trying to wean people off of a government program, I agree with your assessment. In fact, I agree with Mr. Brown's assessment that there must be some safety net in there that allows for the consumer to go back if it doesn't work out in the private market. And if you would just expound on that in the few seconds that I have, if you could.
Sure. It's just that basically just trying to clarify that if you went from the NFIP policy to what was deemed to be an equivalent private flood insurance policy and then went back to NFIP or wanted to go back to NFIP, there wouldn't be interpreted a lapse in coverage as long as it was continuous. And so that respect, I think it has that protection for the policyholders. It envisions that we're not going to get rid of NFIP tomorrow or nor maybe should we at this point. And so I think that's just a recognition that you have to have.
Thank you. I yield back.
I thank the gentleman, and now the